Hello, hello, hello. This is the Options Weekly live stream. We are going to discuss something very interesting that I've been watching in the market over the last couple of weeks. We've seen tech rebound over 15% year over year after getting absolutely destroyed last year. But what we haven't seen is the S&P bounce back in the same way or the Dow bounce back in the same way. What I find most interesting is that it might be a bum rally. It absolutely might be. So we're going to dive into that and a hell of a lot more. We've got a couple of things coming up for you. We're going to go through that idea. We're going to see if this is a bum rally in the tech sector. Are we heading directly into a bull trap? Are we setting up for a bull run? We're going to discuss that. We're going to discuss the best options to trade if that is happening and the best to trade if it's not. We're going to talk about managing risk. And we're going to talk about how to maximize our gains if we are seeing the bull run. How do we get in early, stay in the trade, and make the most money on it? We're going to cover SPY, NVDA, and PayPal. And we're going to talk about a small cap pick of the week that popped up on my screener for those of you just trading stocks. And we're going to give away $100 in Options Pro stuff, which will make you a better trader and make you more money. You got to remember, yes, I know tomorrow the market is closed. So that means we have even more time to dive in. We have even more time to comb through. And more importantly, you have even more time to digest this all tomorrow to set yourself up for the short week going into the week after, which I think is where we're really going to see some movement. Now, whether that's up or down, that's up for discussion. And we are going to get into all of that. So welcome. I'm glad you guys are here. If you want to check in, if you're from the Discord, leave your name in there so I know who you are. If you have a couple of questions or any charts you wanted to go over, drop them in now. Drop in a what's up. Make sure you like the video. YouTube hates us. The algorithm doesn't work, and we don't get much exposure, even though all we want to do is share the good word with the good people. So if you could do that, that would greatly help us. And it just makes me feel good. It's nice to see a lot of likes on a video. Who wouldn't want to see that? Feel free to share this link across the board. I appreciate you all for everything you do. Yeah, drop those Discord names. Fergie, Bobu, Chris, Rozotnik. I assume that because this is Rogue Exotic. I hope that means that's your alter ego. We got the doctor in the house, Matt B. We got everybody here. Every time I see that name, that's exactly how I say it. I think you should know that. Snap, that's a good one to definitely discuss. I would love that. I would love that. That one was an interesting one that we talked about on stream. I totally missed that trade, but I know some of you guys took it, and that makes me very happy that you made some money on some of those ideas that we discussed. I wasn't paying close enough attention. JTK, self-explanatory. You're also JTK here. I appreciate the simplicity and straightforwardness. Neon Learner is now the Maybachian Explorer, so that one I would have never seen coming. But hallelujah, we are here. So what do we have here? This was Airbnb. This is a quick intro. I think this one's really interesting. You had some unbelievable earnings on that pop. I know I'd added this around $90 back here. We held. It came up. It tanked. I was a little disappointed. However, these earnings have paid off. We rebounced a little bit lower. It looked like it was pricing in a new low, but this is one of those ones in particular I really want everyone to pay attention to. Although it did break downtrend, what's interesting here is I think that this is one of those stocks that really kind of gives you an idea as to what's happening in the market. Should this break out and show continuation, I would say that's pretty favorable for the overall tech sector, not because it has any weighting or basis to determine how the other tech sector plays pan out, but because I think the health of a company like this in terms of how it's traded will give a very good, clear indication of market sentiment going forward. Meaning this thing goes, I don't see why other things don't. So let's get into it. Let's take a look at the SPY to get started. Where's my sweet baby? We're just gonna type it in here. Let's just making sure everybody can hear me all right. We're all good there. Audio's good, audio's clean. You can see the stream. Everybody's happy, everybody's healthy, everybody's doing well. What'd you guys do this weekend? Let's slow it down because I get a little hyped, I get into it. But let's just check in. How number one, how did the last week go? Let's see red or green. Drop it in the comments. I want to see red or green. There's 37, 40 of you watching. I want to see 40 comments. Let's be truthful here. Let's share the truth here. Red or green. That's all you got to do is type an R or a G. It can be that simple. I want to know how you guys did. I want to see where you're at so that we can kind of position this stream in the right way so that you get what you need and you're moving forward. And for those of you that were red or green, does not matter. John, just I'm going to make the chart bigger. It's just in the intro. I like to keep it small so you can see my face. We get to know each other. For any of you that are red, come on, keep them going. I only see about 10. There's 45 of you here now, so let's get them all in. What would you say was your biggest challenge, red or green? What is something that really challenged you this last week in the market? Post it in there. Let's see if we can address it. Try to be simple, communicative. Just what challenged you, red or green, irrelevant. What challenged you this past week in the market and or the past month? Tesla news. As a trader, right? What aspect or element of trading? Trade this week. Well, I'll let you guys drop it in there and then we'll check back in. Let's take a quick look at the SPY. So, as you guys for those of you that have been following along, we have been mapping this thing out for quite a while now, and we've been nailing this thing. Every options weekly live stream has yielded at the very least 2 100% runners in terms of trades from the identified price levels we talked about. So, for example, when we were looking at these ranges, we're identifying a top and a bottom. We were trading from the bottom to the top and then from the top to the bottom. We are setting this up so that you guys have the full roadmap for the full week. You're not relying on anyone. You are a totally independent trader to know exactly what would be the smart trade and what would be the best trade for you going into the week because we've mapped it all out. Let's make this a little bigger now. Oh, it's sizing the whole window. There we go. We're at about max capacity there. So we had a couple of really good trades that we identified about 2 weeks ago. We talked about this push up to about 418, 419. And then we talked about trading these 410 puts on the way down. That would have paid off twice, over 100%. And then even more so if you held. Remember, we were talking about 2 weeks or more expiration on those. So if you would have held those, couple 100%. If you traded those the right way, the smart way, you took anywhere from 30 to 60% on those. That's what I would have done. And on the 2 trades I took, that's what I did do. And that was a good trade. We talked about the support bounce a few weeks ago on the bottom of range 3 from 400 to 410. That was a $10 move on the SPY, which would have yielded at the very least 100% on some of those calls we discussed. And then even further, if you held all the way up to 420, and again, remember, we're on the daily chart here. So that was a 2-day move that you saw that kind of price increase, which means those options would have absolutely boomed. My goal here in all of this is to have you set up, have a notebook out. I want you to write these price levels down or have your chart open while you watch this. You should be on a computer. It's the best case scenario. And you need to be mapping this out so that when you're watching this during the trading week, you know, okay, we talked about this. It hit this price level. We talked about heavy resistance. And then we talked about the play that we would take should it get rejected there and start to come back down. You guys have all this mapped out. There's no excuse that you aren't making money off this. I absolutely could not mean that more. I see a couple of you saying I didn't read it correctly. So, okay, we can get into that. Choosing strikes for spreads. That's a good one. We'll get into that. This is one I like. Choosing strikes for spreads, how to know what price to choose in the options that you're trading. Happy to hear that, Mr. John. Amazon has been pretty wild lately, as has Zom. That's been one of at least for me in terms of long-term winners, has been one of the best so far for me. If at any point my connection starts getting bad, please let me know. This is super annoying. I'll just have to go plug in the Ethernet. But just for the time being, please let me know in the comments if that's happening. So what we've talked about so far, right, on every stream is we've mapped out exactly what we could possibly anticipate for the SPY going forward. What is the high? What is the low? And what do we do when it hits each of those price levels? Don't be a bear. Don't be a bull. Be neither. You don't want to be either. You don't want to be anything. If you're trading and you want to be good at this and trade in and out, in and out, in and out, have your maximum profit with minimized risk, you need to just be fluid, baby. You got to just be in and out. You don't take a side. The side of the trade that you take is the one that's going to win, that has the highest probability of success. I don't care if it's up. I don't care if it's down, and neither should you, because we're talking about trading here, not long-term investment strategies. We will get into some of that, but for the sake of this conversation, we are talking, this is the ideal person I'm talking to right now. I want to learn how to use options as a way to pad my bank account every week. I want to make a deposit. That's the kind of stuff we're going to be talking about here. Weekly, and biweekly trades that you can take every month that will add 500 to 5,000, depending on what you're trading with, to your account every month. You should be ripping that out and putting it into your bank account, spending it on your friends, family, boyfriend, girlfriend, kids, yourself, whatever, or putting it into a long-term portfolio to continue that compounded growth. We do not want to be holding these trades when they run and not cashing out and then watching it come back down only to break even or hold or add and lose money. There's no reason, there's no excuse. Three things I was just talking to everyone's favorite person, What the Duck, aka Meta Matt, that we're going to discuss in depth on a podcast I'm coming up on, is that what I've noticed in right now with all these Discord rooms and all these trading gurus, like I'm not a guru, that's absolute bullshit. I'm someone who's dedicated a lot of time, effort, and energy to learning this, and I very much enjoy sharing what I've learned, but I'm not, it's just nonsense. I'm giving you every scenario so that you can map out what makes the most sense for you, and hopefully I can help you through that. Very few of these idiots, yes, I said that, have a thesis in any context. You can have a long-term thesis, meaning I believe in this sector over the next 5 years and here's why. Or you can have a thesis like I just referenced. I want to trade ranges. I want to play the highest reward, lowest risk scenario in every play that I take. That's my thesis. High risk, low reward, trade ranges. Don't be an idiot. Support and resistance tells you everything you need to know. Volume tells you everything you need to know. We need to be guided by these things. It needs to inform our decisions, and it needs to be our God when it comes to options trading, right? It's the Bible with which we read and interpret and understand. It's how we understand the market, right? The thesis is 3 to 14 day swing trades, right? That hit max profit and minimum risk by being properly allocated, meaning my whole portfolio isn't going into one trade, by following said thesis, meaning we are range trading, bottoms to tops, tops to bottoms. This strategy isn't applied to breakouts. This strategy isn't applied to momentum. This strategy isn't applied to long-term growth. It can be, but not in the context we're talking. We're talking ranges that have a 3 to 14 day lifespan, meaning these are short and manageable trades that aren't day trades, so they're not going to kill you if you can't stare at it. They are trades that the 9 to 5 everyday worker, new options trader can take efficiently and effectively, that maximizes your time not doing this, but also maximizes the reward of doing this. I don't want you guys sitting here for 14 hours a day racking your brain staring at a chart. I want you living your life, checking in, making some money, and laughing about how easy this is. That's my goal. So most of these traders do not have a thesis. And because they don't have a thesis, it means that they have no plan. They're not following any kind of plan. They're taking random trades. They're in some other, analyst room and they're watching them post a play. And then they're just kind of adjusting like, so I'm not copying him. He said 410 calls. I'm going to do 411 calls. That in and of itself is the stupidest thing I've ever heard, because when I put these plays out there, I've looked through the Greeks. I've understood, I guess, the fundamental elements of the options contract that makes it the most beneficial one for us to take. Not just the strike, right? Open interest, volume, how much is data progressing, like everything you need to know. We do that work on the back end. So when these guys have no thesis, right, in terms of like what and how am I going to trade and what's my core belief driving these trades. Number two, they don't have a plan. So there's no discipline to follow in that trade, meaning they don't have any type of proper risk management to help them thrive and succeed even in bad market conditions. Trades will not go your way. If there's no plan, if there's no thesis, and the trade's not going your way, what do you think happens? There is a reason, my friends, that 80% of options expire worthless. You want to know what that reason is? No thesis, no plan, no discipline, and no guidance. And that is what it is. Options premiums are a great way to collect passive income. It's much like real estate. I have to own a little bit of an asset, and in some cases I don't. But say I own 100 shares of something, I sell an options contract that's right outside of resistance and within the time frame. I'm going to collect some free money. At the very worst, I make a profit, I keep the premium, and then I buy my shares back. Done and done. Options trading is your holy grail when it comes to making money in the market. You can find the quickest return. You can manage risk most effectively, in my opinion, as long as you implement a few core strategies. But most importantly, you have to have a thesis and you have to have a plan. Those two things are critical. They're paramount to everything else. If you have neither of those, I'm sorry to say it, you're screwed. You're not going to make it doing this. Is anyone familiar with the law of diminishing returns? Just hit it in the chat. A yes, a no, a yes, a no. Yes, no, yes, no. I don't see any comments. I'm just going to keep asking yes, no. Tell me, does anyone know about the law of diminishing returns? Or have you even heard of it? If you just heard of it, that's fine. Oh, sorry, those all just came. So essentially, it's a principle in economics, business, the market, everywhere, right? Where your return typically will perform on an S curve, right? A waveform. You have a ramp up period. So, say a new business is rapidly acquiring customers, right? Let me actually, I could pull something up for you. Oh, this one explains it really well. Yep, I'll switch this over so you guys can see it. The law of diminishing returns. There you go. So you guys can all see this, right? Right here. The law of diminishing returns. So as you can see right here, this is our productive phase, right? So in the context of business, right? New customers are flooding in, right? You're getting a huge output. You're getting a huge input from customers for the output you're giving out to the world, right? So this could also be your trading, right? You're taking the right amount of trades with the right amount of time, and you're seeing maximal profit, right? You hit a certain point wherein the effort it takes to grow from there becomes exponentially greater, right? So say you have a business from 0 to 1 million and you have to put in minimal effort to get there. Great. You're part of the 1% in terms of business owners. But to get it from 1 to 10 million is a much more difficult journey, which means your efforts may have to double or triple to get there. But let's say you only make an additional million. So you're at 2 million a year, but your efforts have tripled. Was it worth it? Right? You have to scale up your cost. Things cost more. You add more people. You start to struggle, right? You hit a point where right here, you've hit maximum output. So if in a business context, all of a sudden your net expenses go up and your margins go up, but the net expenses continue to climb faster than the margins you're making do. So as the business owner, you're spending a lot more money thinking you're going to grow, and you are, but the cost of that production greatly increases, so much so that it shreds down your margin. In terms of trading, right? You take 3 trades, you are profitable. Say you make $1,000 on 3 trades, you're doing great. You take that 4th and 5th trade thinking, I'm going to make a little bit more. Now all of a sudden you give $300-$400 back. That additional effort doesn't actually warrant you anything but a loss. Kind of following in line with discipline, right? Knowing when it's time to say no, when it's time to stop, when it's time to cut it. There's a certain point where your effort isn't going to yield a greater result. You have to know that point. And in options, this is essential. This is absolutely essential when it comes to trading options. There's a certain point in time when that theta burn kicks in, wherein if the stock keeps running at a marginal pace, say a small percentage each day, your contract's actually going to continue to lose value if that theta, your expenses, goes higher than your return. Does that make sense? So this is just a basic economic principle that's I would say is like essential to just understand, period, because it applies to life, it applies to your trading account, it applies to your work product, it applies to everything. At a certain point, putting more effort into something might actually not get you a better result. It might actually give you a worse one. You need to find that optimal balance, right? Like that sweet spot wherein the effort you put in gives you the result that you want, and your effort is most valuable. I see it in business all the time. People are making 200 grand a year. The business is like, it's badass. You're doing it by yourself. And yeah, you work 6, 7 hour days, but then they hire 5 people. They're still working 6, 7 hour days, but now they're managing people, not even doing what they love. And all of a sudden, they're only making 100 grand a year. The business is making 500, but they're only making 100. What's the point? We have to ask ourselves these questions, because when it comes to trading, which is why you're all here, which is what you care about, when it comes to trading, we cannot do that. We cannot make 3 great trades that pay off handsomely and then throw in 4 or 5 more trades thinking more is better and give back half of those profits. It doesn't make sense. There's no reason to do it. And no one else can tell you this, except for no one else but you can figure this out. I don't know when you hit your tipping point, your threshold, wherein you're going to start losing from more effort. You need to know that, because I can tell you where that's going to happen on the chart, but I cannot tell you where that's going to happen in your portfolio. Some people are used to 20, 30 trades a day. Some people are used to 5. Sometimes more is not better. For some, it may be, but for the most part, it's not likely. I've done it to myself. I get my maximal return for time spent with the swing trades I've been posting in the last 6 months. Those long-term swings, I'm putting a larger percentage of my portfolio. I'm taking 100 to 200% on those plays, right? Those have yielded max reward for minimum input. Best case scenario for me. Best place scenario. Yeah, as Ben said, there's a time and place to scale up, and it doesn't happen often. Most people hit the wall, and that's perfectly fine. It's just knowing that you smacked your face against the wall and not continuing to burn yourself in doing so. So as we look at the SPY, we need to really start to ask ourselves, for those of you always worried about missing the upside on the SPY, for those of you that are trading options and saying, I don't want to miss the bull run, I think we're hitting a point wherein you should strongly consider what I'm about to say. And what I'm about to tell you is the risk of missing the upside is significantly lower than the risk of betting on it and losing. As of right now, where we stand in the market, I'll say that again. The risk of missing out on the upside is substantially higher than the risk of being wrong. So by taking exponential risk now, betting on the upside, you are putting yourself in a position to get absolutely destroyed. I'm not saying it's not going up any longer. What I am saying is that the risk to reward here is not optimal. It doesn't make sense. The market right now is not, in my opinion, screaming bull run by any means. They've told us that inflation is I mean, we all know this. It's red hot. And they're talking about it's not done. We're going to keep going. So that's why I brought my point up of asking the question to myself, right? Is this a bum rally for tech stocks? Is this a junk rally, right? That happens a lot. You see it with bankruptcy. Companies go bankrupt, like companies screwed, absolutely destroyed. All of a sudden, stock starts just pumping. Junk rally, short-lived, quick profits for those of you that are very skilled and know how to get in and out. But it's difficult. It's difficult. And you have to know when it's time to really take it in and consider that may be happening here. So when we look at the SPY from an analysis standpoint, what do we have? We pushed the high. We talked about this. This is about 2 weeks ago. We talked about pushing to the high of 417. We did that. Okay, great. Cool. Awesome. We had a previous high of about 430. Remember, 430 is our make or break point. That's the point in which if we break above 430 on the SPY, probably golden. I think we're going to rip. We'll rip from there. We'll just go. That hasn't happened yet. So what we talked about was the possibility of retesting 430. If we did, I would say it's a pretty strong bullish signal. But more importantly, it would set us up for the best trade we'd take for the year, because we would wait and watch. If it broke 430, we trade the upside. We go 500 calls. We bet the farm. We win. If it fails, if it tests and fails, shoot, we could buy 370 calls and be in the money in 2 months and make hundreds either way. That's the beauty of it, is we had a 2, 3, 4, 500% winner on the table either way. So that was our best case scenario. That's what we wanted to see. Are we seeing it now? No. Is the SPY looking weak right now? Yes. So the reason I say that, are we in a tech stock bum rally, is because we need to be vigilant and strongly consider that that is happening. Only because here's the information we have. Inflation at an all-time high. Maybe it's not an all-time high. I don't know. Check the stats, but it's extremely hot right now. They're talking about that continuing, right? Controlled by banks. It's going to continue. Controlled by food providers, producers, distribution. The whole supply chain's telling us this is going to keep going up. We had some commodities hit ridiculous all-time highs of prices in the last year, right? We had fuel, energy, gas, eggs, milk. Everything's just boom. Record profits for companies. Good for them, I guess. In my opinion, they passed the cost on early so that as the costs actually go up, there isn't price shock and sensitivity. But right now, as far as the chart goes, right? Because we're going to rely on technical analysis above most things because that's what we're talking about here. That's the lesson here. We touched 418.31. Remember, all these lines were drawn before this happened, right? This is just simple base technical analysis. You don't have to be a wizard to do this. We had our top of range 4 being right here, 423. That's what we were hoping to see. That was support on this last little bull trap here. We were hoping to see that again. We didn't. Not yet. Could we? Sure. But we didn't. We've got our long-term resistance here. As far as the past 6 months, we broke above it. That's the only reason people are talking about the SPY being favorable, the market being favorable for upside. But what I'm more concerned with is that these highs, it was progressively taking out highs, right? Here, even on red days, progressively taking out previous highs until we hit 418, 419. We haven't priced in a new high. We did here. So it was at the 14th, Valentine's Day. But since then, this is bad, this inverted hammer. Let's get to the weekly and have a better view here. It's more what I'm talking about. On a weekly basis, we have not priced in a new high for 2 consecutive weeks. I don't like that. And we have also successfully priced in a new low week over week. Now, if we go below 400, if we price in a new low past this week right here, I would argue that things are coming down. It's going to be rough, but we're going to make some money trading puts, and it's going to be excellent. Should we hold support at about 403 or so, right? These are all within a margin of error of 3%. So it might not be 403 exactly. It could be 401.50. But just so you guys have this is the notes. These are the notes that you want to write down. You either want to map this out on your chart or write this stuff down so that you can have it in front of you. So when this is happening in the market, you are fully prepared for both outcomes. I got to sneeze. So you guys got to hold on. Thank you for your patience. New lows, no new highs. 403 incoming if we can't break above and progress above 415 early in the week. Remember, it's also a short week, so there's going to be significantly less volume. We've talked about how we wanted to see volume over 500 million for the week to the upside, and we would start to become bullish. Important note. What does volume do? What does volume tell us? When we see volume inflow on a chart, what does it tell us to do? Or what does it tell us? Someone wouldn't mind typing that in the chat. It this way. A change in volume always does what? There you go. So close. A change in volume. There you go. So volume tells us that it's going to move. It does not say up, it does not say down. It tells us movement is coming. Something is coming. Prepare yourself. Why is that important? With what we're doing here, what we are accomplishing week in, week out, we are setting these ranges. We are identifying our price targets before it even happens. We are setting our thesis, preparing our plan. From there, it's just execution. We have everything lined up for both scenarios, bear and bull. So when the volume precedes a change in price, when the volume flows in and we know a change in price is coming, and we're sitting right at resistance, we know we're either trading downside or upside. More importantly, we know what to look for to tell us when it's time to take that trade. If we're looking at right here, right, as we just talked about, if we break 403, right, if we lose support there, we know we can trade to downside of 389 at least. We know that that is the smartest trade to take, the highest probability, maximum profit, minimum risk. This is all just math. And we'd also know that we've dropped from, we have good price, I would say we have good price fluctuation to 385 from this price point of about 407. We've done it 1, 2, 3, 4, 5, 6, kind of 7, 8. We've done this 8 times in the past couple of weeks. It's moved up and down in that range, right? So we look at it like a band. Top of range 3, which is right here, it's about 411 or so. Bottom of range 3, $400, give or take, right? So we know at the very least that if we push up against this 411 and we hit firm resistance and this thing starts to come down, the smartest trade for us to take is 400 puts, right? Because it's done that how many other times? 5, 6, 7, 8, 9 times. All we have is the past price data to tell us what could happen. And all we're doing here, it's all this trading is betting on the most likely outcome as we see it. But we can only be consistently right if we have a thesis and a plan. Our thesis is that SPY will trade within this range, and our plan is to trade upside from the bottom, downside from the top. Very simple. So if we see this push down and we lose $400 support, look at this day right here. Look at this week right here. We move from pretty much right where we are now, 407, 408, down to 381. What's stopping it from doing that again? And that was on low volume, right? After a fake out. We looked like we were coming back up, strong bullish support. We just pushed off resistance and we priced in a new low relative to the previous 3-4 weeks. Why would anyone think that we were going to go bullish here? No, we went bearish. And then we bought down here because that was the right move. It was a ridiculous low. Traded back up, and now we're here. These are just bearish neutral candles, meaning the bears are in a greater sense of control. They don't own the show, but they have a greater sense of control, in my opinion. Greater grasp on the market. We broke this trend. We got nothing right there. So let's look at what we can expect for this week, and then we're going to move on to the couple other tickers I think are really worth looking at. I hate that this is snapping in magnetic like that. I don't like that. So we lost, as we said, we lost our trend right there, okay? And ironically, became resistance, right? If you press up these 2 weeks, right? Because we just want to look for points of confluence. We've got it 1, 2, 3, 4, 5, and then 6 right here. We're trending against resistance, right? We lost this channel right here. Not good. So let's look in a longer time frame. Where can we reasonably expect support? I would argue that it's right here. So let's get rid of this to declutter here. I've got our long-term resistance. We're going to leave that up there. But we're going to get rid of this. So I would argue that if we're going to hold up here, we need this wedge to continue forming. We need to see a bounce, and then we need to see this suppress or compress, excuse me. We need to see this bounce, and then we need to see price compression until we hit this, what is this, 407 or so? 411. I would love to see price bounce, continue to compress. Good scenario is hitting 400, solid bounce. Price compresses, starts to ride up here, and then boom, we shoot up. I'd love to see that. That would be a bullish scenario in my opinion. But we're not there yet. We're just not there. So we need to be weary and we need to be prepared to trade this as it's with what it's giving us right now. But more than likely, if we open this week strong and we can't hold 411, we're trading back down to $400 puts. I would put at least 2.5, 3 weeks expiration on it, make a nice 40 to 60% at the minimum, and you'll have a great trade. If we break strong and we can close the next 2 days above $400, then I think realistically we can aim for 420 again, as long as we're above that stop, right? So as it pushes up, it's going to come down and test support. We can take the trade there. And if support breaks, we close the trade, we take a loss, and that's fine. We'd be trading probably a 15% loss for a 50 to 100% return. I'll take that any day of the week. That's a calculated trade. We need to be calculated, or there's no point in doing this. So that's a SPY for you. I really hope you took notes. I really hope you map these out and you know exactly what to look for, because I gave you the sauce here. You got the bread and butter ready to go. So keep that in mind. I hope you guys are watching and have that all mapped out so that you know exactly what to do. And then I'm going to take a drink of this and then we're going to go. Time's it? Oh my God, it's 8 o'clock already. Look at my notes here. We've actually pounded through most of that. Let's take a quick look at NVDA and PayPal. Those are two that are very interesting right now and have rebounded ridiculously. Well, NVIDIA has rebounded with a vengeance. And the question I'm sure everyone's wondering is, will it continue? This was a phenomenally profitable options trade. I added, I think it was right about here. Was it November? It was when we added. So first buys were right around here, I believe September. I cost averaging on that contract like $10, $11. So 1,100 per contract, and then added down at about 700. Went as low as like 400. So if you got a bottom scooper, you're up 400%. I am not. Based on my cost average, I saw a maximum return of 200% on this, but still, it was a larger position. It was a heavier trade with a high degree of confidence, and thus I put more money in it. Again, as we talked about, my personal thesis has been longer swing trades with more time on them, and more importantly, very calculated risk reward. I knew exactly what the deal was before I got into the trade. When I was cost averaging in at about 650, so 650 a contract, so half of what I initially paid, just about. I knew that my risk was we push back down below 6, it was done. So I'd lose like 40, 30%, but my reward was potentially 150%. So it was like 3.5, 4 to 1. It's a good trade. And we didn't even push against what I think will be resistance here from this long-term trend on NVIDIA. So I think we still have potential upside, but again, pivotal and very key price point is this line right here, this 204. And again, this is something I'd highly suggest you mark on your chart so you know. This was the range that we traded. 127 to 204. As you can see, absolutely crushed it. Quicker than I thought we would, if I'm being honest with you, but we crushed it nonetheless. The same thing we did with Netflix. What we anticipated was support bounce, just like we saw back here. This is back in 2021 in March. We anticipated the same move because what does it do? It repeats itself. That's what life is. Nobody has any new shit. Nothing I say is original. I've either heard it someone else or someone else has said it before. We need to know that, especially when it comes to trading. Nothing is original. You just need to be able to adapt and be inventive and disciplined, and you will thrive at this. And if you're not, please message me. For those of you that are in the Discord or are already in the trading education, please message me. All I really care about is seeing you guys succeed at the end of the day. I don't really care about much else, which you probably hopefully know that by now. So we are seeing again bearish neutrality here, right? So bears are in control, but we're not completely bearish yet. This inverted hammer was no good. Remember, we talked about this is when I posted in there, we're going to take profit. This is the optimal place to take profit because I did not like this inverted hammer. We got another push up, double top right there. If we go to the daily, we got another push up, and it was easy to take profit there because that was like 200% plus. If you got in at $6-7, you were up 400-500%. We're starting to fade down here, right? We don't like this inverted hammer here, and I don't like this bearish neutral happening here. I think this was the beginning of the end, in my opinion. When you see that, it means bulls push price up, bears push price down, but bears hung on longer. And then bulls came back with significant volume. That's the only thing that's really making this interesting here. Something must be afoot from fundamentals, business, macro, econ, political undertone type of thing, because in my opinion, I just don't see much reason that institutions or large buyers would be buying this right here, right now, given the current economic conditions we all face. But hey, whatever, man. So we got a double top here, right? So we haven't pushed buy side strength stronger than we did back here. So when we were trading at about 154, we had buy side strength 76 in the RSI. We didn't even push much higher. We're talking 80, right? Which is good, but then we topped out at about 70. Is that 76? We topped out at the previous high in the RSI. Look at the RSI just like you look at a chart. But then we broke out in price, right? So we see that divergence and it makes us concerned. What we don't want to see is RSI continuing further. As you can see down at the bottom of my screen, see we're right here. We're pushing to about 54. In the past, we were able to hold up at about 54 with as low as 51. We don't want to see this go below 51, and we don't want to see price go below 205. If we do, that's not good stuff. We do not want to see NVIDIA's price go below 205. So that's something to watch for those of you in equities and those options. Moving on, we're talking PayPal, and then we're going to get into a small cap trade that I think will be very interesting. PayPal's getting beaten up here. This was a great trade for us. For those of you that are trading, sorry. For those of you trading equities, this was a great range trade. As I told you, that's my thesis. That's my strategy. That's what's crushing for us right now. We took this trade on this breakup right here when it hits just above 69. Look at that. Pushed up just about to the top of the range, hit the first target at about 88. Great opportunity for profit, especially on a slower moving stock like this is fantastic because this is like over 2 weeks time. And now we're coming down and we're testing new lows and we're seeing what's going to happen here. So we have, I think, what is support right here. We need to be very mindful of below $72. Things start to get dicey. And then we're going to probably price in new lows. We did have significant buying in the other day. Remember, we talked about seeing volume here at above 40 million. We wanted to see realistically 50, but 40 million is good enough on the daily because we could see right here sell pressure was huge. Trade over 54 million shares, and that was kind of the beginning of the end in terms of price action right here. I want to see the same thing, but to the upside, I want to see over 40 million shares traded on a daily, strong to the buy side so that we can really get a move up. We're not seeing it. Hopefully, this is the support bounce right here. We've got a nice little range here. It's held up in the past. We really want to see that hold. We don't want to go any lower. Realistically, I could see this coming back down to that support right there, which is kind of the bottom of the range all in, because we found some resistance here, which tells us that this price point's important. And we broke up and we held, right? But this was support back in 2022, about July. We don't want to see that again. So be very mindful of that. Make sure you mark that on your chart. Again, below that price point, you could pretty much take a break-even stop loss right now, in my opinion, still get out ahead. We already had a decent profit on this one. Don't be greedy. Don't be stupid. You don't want to hold on to a bad trade that's going to lose you money. It's just not worth it. For those of you that were looking at this one, Altimmune, this one seems to be continuing here. I believe we talked about it last week. If it can hold right here, I think this is actually going to be a pretty good trade. I'm going to slide this up because I don't want to draw a new one. But I'd really like to see this. Oh, son of a bitch. Sorry, just a second. I'd really like to see this hold here, call it 1160, because I think that we have two clearly identifiable ranges here. All right, three essentially, 1, 2, and 3. We want to see the bottom of this range hold. This could be a golden trade for us where we're buying at the absolute bottom of this range, and then we trade back to the top at 17, right? So 50% ROI on this. Maximum risk, I would say 20%. So you're trading 20% for 50% is 3 to 1, pretty much 2.5 to 1. I think this could be a really good trade. I don't even know if I'd hold it that low. I'd realistically look at the bottom of these wicks and these strong buying days at 11.14 and call it there. And then if it comes down lower, you could just buy back in at 9, $10. But I think this could be a phenomenal trade, mid cap trade for those of you trading just equity stocks. I believe there are also options to trade, but on biotech like this, I'd much rather trade shares. I just feel a lot more comfortable doing that. So in looking at this, I'll type this out so you have it. Hold above. Back to top. If you guys haven't, please, 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 if you go ahead and click right below the video to make sure you hit the notification bell so that you get notified whenever these streams come up. We've been doing a lot more live trading, a lot more live streams. I want to make sure you guys don't miss any of it. This week, I'm going to be coming on and doing a quick little options deal. So you want to make sure you hit that notification button because if I just pop up and get in there, I don't want you to miss it. Make sure you follow the channel as well. The notification bell is different. Just turn notifications on and you'll get those and you won't miss a thing. So that's what I'm looking at for Altimmune. I really think that that could be a phenomenal trade if it holds this range. Keep in close proximity to this trade. Make sure you keep your mind and your eye on it because at the end of the day, if it doesn't hold this range, then it's no good to me and I could care less about it and it's dead to me. We do not want to get attached to anything. We want to take the trade where it is, meet it where it's at, make money off it, and then shake hands and walk away. So that's a great one to watch. The other one, let me take a look at this screener here. We're going to take a quick look at some of these that look weirdly phenomenal right now, especially given the market that we're in. It's particularly interesting. One of which also biotech, and the ticker is FATE, FATE. God, I got to sneeze again. There we are. This one is very, very interesting. I'm going to put the ticker up there so you can see it. FATE. This one came down from into oblivion. Huge gap down to $4. And now it is just primed and curling, rebounding off extremely oversold. Extremely. And looking like it wants to fill the gap here to 950. So this, in my opinion, is a pretty simple, straightforward trade for those of you that like these kind of setups. This is like what I like to think of as the Lee special. This is also a very similar setup to how Netflix's chart looked when we trade that oversold bounce, in my opinion. So, for example, on this one, I am going to map this out so you have a very, very defined risk. We're looking at this as the springboard right here, right? 612. 612 support, 612 springboard, below 612. Bye-bye. It's done. Goodbye. Don't mess with it. If it stays and holds, this could be a very good position trade wherein you have fixed risk, meaning below, what is it, 610 or so? Cut loss, be done, right? It's trading 650, so you lose about 40 cents a share, less than 10%. The reward is that it closes this gap at 956. You make $3 a share. So your risk to reward, there's 6 to 1, or sorry, 1 to 6, meaning six. You're risking for every $1 you risk, you're going to make 6. That's a good ROI, in my opinion. So this is one that I would definitely mark on your chart. I would definitely set on your watch list, set a price alert, keep a close eye on it. We want to see stronger volume come in, obviously. But if this is the support bounce that this thing was waiting for, then this could be a phenomenal setup back up to 960, 950. Don't be greedy. Take profit incrementally over time as it runs 10%, take a little, 20%, take a little, 30%. One of the smartest strategies I've ever seen employed. If it's up 10%, you sell 10% of it. It's up 20%, you sell 20% of what you have left. You sell 30%. If it's up 30, you sell another 30%. And you incrementally sell your position down without giving it all up, right? So you can leave some to run. Who doesn't love slapping an $800 or an 800% winner on the table? Not saying this will be one, but you get my point here. You don't want to cut it too early, but you do also want to manage risk. So I think this would be a phenomenal trade as long as it holds that support. This is an easy gap filler. Keep a very close mind. I don't know if they have any type of PDUFA stuff coming up. So for trades like this, I would go and make sure you follow the company's pages everywhere to know if they have any sort of clinical trial announcements or anything coming up. Because if they have data coming up and it's not good, this thing is getting absolutely destroyed. So it might not be the best trade for you. From a strictly technical setup, it's fantastic. But biotechs are beholden to the announcements. Do not forget that. So, disclaimer, make sure that they don't have any make sure they don't have any important data coming out that I could absolutely wreck this thing. I was looking at it simply from a technical point of view, not looking at the fundamental aspect there, just as a trade. So keep a close eye on. And those are the two mid caps that I liked. And there's one more that I would consider a little more small cap. That's like one of my favorites that has made me a lot of money over the years as a trader. It loves to follow these ranges very closely. The ticker is CCO. It is Clear Channel Holdings. They own a bunch of billboards. You've probably seen them in local airports, on highways. You've probably seen them all around. Don't know how the business is thriving personally, but who knows? Uh, but this thing it abides by the ranges that are giveth to it. As you can see here, it just stair stepped up each aspect of this range that I mapped out, and then did the same thing here. Flowed through, down, 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 held support, pushed up. Look how it traded this range so well. Top, mid range, out of the range, top of range, bottom. This thing loves to abide by what its daddy. It loves to abide by it. So, should this hold above 175, I think this thing could probably go up and clear $2. So nice 15%. This is probably one I'd watch more so as a day trade rather than swing trade. But if you can map out that trend, as you can see here, it loves to abide by the trend. This is one you could have just simply held as it bounced up and down until you finally saw this ridiculous price expansion here and sell it. So you could have gotten in at what? $1.06, which I believe that's Wheeler. This like 140, 130, and it traded all the way up to, what did it trade up to? It ran as high as $4, was up 300% at the end of the day, and then just completely sold off into oblivion. This thing will abide by the range and trade well. I don't think this is like optimal ideal entry. I think realistically, if you wanted to swing this, I would watch and be more considerate of something like this. Wait to see if this come and scoops down. But if this is a nice little cup and handle, and this is the descending handle, this thing could rip back up. As you can see, it is I believe, a relatively low float, and it ripped through this zone. Think of it like a gap down with that sell pressure, and it loves to move in quick increments. So from this price 193, it rips up to 260, right? And then from 238, it's ripped up to $3. So map these out so that you know where it can run from, right? And then if we look right here from 151, it ripped up to $2. Map these out. These are your horizontal ranges to set so that you know, based on where the price is, how you can trade it. That RSI is holding up there. I can't map that out on this, but decent. So keep a very close eye on this. I think this could also be like a great small cap trade for you guys. Just to put it in front of you and make sure everybody's keeping an eye on it. And yeah, that's pretty much it. So we're pushing up against the time here. Does anybody else have anything? Any questions? Like any questions about actually about trading? Maybe not looking at a chart, but questions about a particular kind of risk management. Anything I talked about with the thesis, having a plan, any of those more meta elements of trading. And I'll answer this question while I wait. Do you use anything other than screeners to find new biotech stocks? Occasionally, I just kind of try to comb through news. I like to find, so again, not to talk about it for too long here. Sava, right? I had been watching the Alzheimer's market for about 2 years when that one came in front of me, right? And remember, that was like on options alone, we were up like 50,000%. Like, it's not an exaggerate. No, 13,000%. I was up $50,000, 13,000%. It's not an exaggeration, because that's a massive underdeveloped market where there are essentially no drugs and no forms of treatment that have been effective thus far. Yet it's a multi-billion-dollar market. So I guess I do look at markets overall to try to find need and try to find opportunity. And then I will comb through specific companies that are in that niche, but not as often as I used to. More so now in this market, I look for the technical setups, and then I comb through those elements when I really like it. Altimmune is I think a decent company as well. And the other one we've been talking about that absolutely ripped. Uh, One of those partner companies that we've worked with is ATNM. Perfect. I think that hopefully this shapes up as a cup and handle here, descends a little bit, and then rips. I mean, Oppenheimer's got coverage on them. A number of very large brokerages are very interested in this company. They bought into the IPO. I think they have a great pipeline, a great breadth of knowledge and experience. They're extremely well managed. So, like, I do like to find biotechs like that have huge potential, because these are the companies that can go from 10, $15 a share to 200 a share. It's not common, but it's possible, right? So these are kind of the moonshot trades, to have a little bit of exposure to. But conversely, they also can just dip into nothingness and totally destroy your portfolio. So it's not for the faint of heart. Max pain, max risk, your maximum threshold for loss. How many lashes are you willing to take in terms of dollars? So I would look at it as a function of a percentage more than anything else. Like, what is the max amount of percentage of that allotment of capital? So if you put $100 in a trade, are you willing to lose 20%, 15%, 10%, which would be 20, 15, $10? Because your capital is all you have. Risk management should be the only thing that matters at the end of the day. Everything should roll into risk management, because if you don't have capital, you got nothing to work with. Also agree. This is another one of the company partners we had that we helped them get some media out into the world, because I agree that they have a phenomenal team behind it. I think this one could be absolutely huge. We could take a quick peek at the chart. Um, that's what's been really interesting about working with some of these companies on the media front, because you got to really sift through stuff to get a true representation of what a company's doing. Look at that consolidation, though. It's just been trading from that 89 to, what is it, buck 20, realistically, to a buck 20, and consolidating, waiting, in my opinion, waiting for big news, big move, and I think it can absolutely go. So yeah, so unfortunately, I have a lot of experience with that, actually, particularly. So Subutex is the generic for, you may have heard of Suboxone. Essentially, middle class methadone is just a way for them to roll the cost to the insurance providers and make more money, rather than it go to the state funded Medicaid centers that provided methadone. Um, but and it's also far less abusable. Um, that market is pretty burgeoning right now, and honestly, the opioid stuff isn't going away. So our nonprofit works more now in risk prevention than anything else, mitigating overdoses, providing and distributing Narcan. If you care to check it out, check out Never Alone Recovery. We just basically help families from start to finish with the treatment process, counseling services. We're end to end, so we make sure that the family gets the same amount of care as the client themselves, because addiction is a family disease that affects everyone. But I agree that that is a very interesting market. Um, Kangtone, did I explain that well? I do like that, made me laugh, so thank you for that. But did I explain that Max Payne well enough? Also, MetaMan and I have discussed recently doing an Explain It to Me Like I'm 10 series with options, especially because I don't think there is much in the market that explains things just on a simpler level. Um, I also want to take a quick look and see what else we got popping right now, because we got one other screener that's pretty wild. I'm also working right now. I'm trying to find a way to distribute this screener. It's a little ways out, because I guess there are a certain amount of regulations, limitations of distributing the data automatically that I was not aware of. So, but we're working on that as, like, hopefully like an additional product we could offer for those of you that just like want the screener results popped in. Um, wow, there's some big moves. Crocs, dude. Crocs. That is still, I mean, hats off to him. That one is something. I do not like it here. I'm just saying, like, wow, they really did it. They really did it. let's look at this one really quick. Stitch Fix. Very interesting. I still don't understand what the hell they do. Does anybody know what they do? Stitch Fix, I still don't. Like, honestly, I don't really understand what they do. I could just look it up, but fashion company, personal styling service. I don't see how that's 2 billion in revenue, 765 in assets. That's crazy. This thing has come on down to oblivion. This is the chart. It looks like institutions have been making significant buys at these price levels. This may be one. Let's go take a quick browse over to here. Wells Fargo rated to equal weight, $4 price target. Whoopee. So is it still a bargain? I don't know. I don't know enough about that industry to say, but from a technical perspective, this chart could be pretty fruitful. I mean, look at that consolidation and look at those buys. I mean, either somebody's loading the boat. Somebody's loading the boat, 100%. I love that little bottom scooper. Look at that thing, just that slow curl, baby. Let's get this is one to put actually on the we're gonna pop this under the 4-hour. I'm gonna give you a secret sneak peek at the premium stuff here. This 4-hour Bollinger Strategy is like one of my favorites for swings, especially when it takes the top, breaks out, and then does not go through the midline. That is bullish. As bullish as can be. Significant volume. If this thing holds up here, it could retest $6. But I'd be more interested in the long term. Does it go back to 8? It looks like it was going to, and then it sold off, which is why it makes me a little nervous. Get rid of this so we don't have as much mess. But as you can see here, it looks like it was going back to 8, and then it was trying, and now we're hitting resistance here. So this one will be interesting. I thought that handle would form and it would hold up. I do like that it stayed above 407. So if it comes back down to like 415, 420, I would probably buy some of that with a firm stop below 4. And that could be interesting. I don't know that much about retail though, so I would ignore. I don't know, probably ignore that. I don't know if about the company or how those markets function. I'm not big into that. Maybe Lee or Amy or somebody or Bull does, and then they can weigh in on that. But performance of quarter over quarter is 23%. So they're up on the weekly, monthly, and the quarterly. That's interesting. Institutionally owned 90%. So I would argue that these are probably institutional buys there that are coming in because that's pretty significant volume, even more so right here. I mean, 6 million shares versus probably an average volume of less than a million. So 6x. Firm bounce on the oversold here, right? So I think if this thing RSI stays above 50 and this thing can hold up like above 470 or so, this thing could be a nice little mover. Keep a close eye on this. This might be a slower equity trade for those of you looking for some growth, but just one thing, men's legal dealers. Yeah. So I really don't know. I really don't know what it is. Yo, John. Hit me up on Discord, man. Add Big Quench. It's at the bottom of the screen. Hit me up on there. Yeah, Board, I agree with you. I don't really know enough about it. Like the chart looks decent, but honestly, that's a stupid company. It's a stupid business. I don't even really think that makes any sense. I still can't believe Crocs went as crazy as it did. That's just a wild one. Let's look at the 45-day. That LabU trade paid off, did it not? Up to 942, and then it's held at above 7. It needs to hold. It's trying to create a new range here, I think above 710, which would be phenomenal. Prime for breakout, but we really wanted to see that hold above about 780, but we did get our profit there. I mean, that was a phenomenal trade back to up to 950. I think it's like, what, 30%? 30%, just a few days. Amazon broke through, so be very careful there. I still can't believe that did. One of the few that held up was Qualcomm. That was also a great trade. We were talking about that about 120, went up to about 140. Or was it at 90? I have to go back and look. Sometimes I put in these trades and I just automatically execute, and then they'll hit, and I won't even realize it. Um, so if anybody remembers, please let me know. I can't remember if we got rid of that channel. Let me look. Discord's not letting me search my messages. That's annoying. Yeah, I'll have to look that up. I'll have to look that up, boys and girls. It was where'd that go? I wanted to look at that QCOM chart. Oh yeah. So that oh man, I'm an idiot. 1117. So 1117 is trading at 120. So it went to 140. So that's nice. That's a nice little 20 percenter. Congratulations. I hope you guys took. I guess it just automatically executed. That's cool. EDU. What else do we got? So I'm just trying to see if there's anything crazy going on here. I've set up a few new ones that I'm working on that aren't, in my opinion, they're not. They haven't satisfied me yet in terms of back testing, but they're interesting, and some of the results are pretty interesting. Citigroup, that was a nice pickup. Yeah, Citigroup's one to watch. See, that's what's interesting right now is you got a lot of these companies that you can see a golden cross. I think that's really interesting. So add Citi to your watch list. I think that one's worth a look. Personally, um, definitely worth a look. What the hell is this? What is this? Lunar Intuitive Machines. Is this like an IPO or something? Or they just list? The hell's going on here? Does anybody know anything about that? Acquisition. Is that a SPAC? Is that happening again? I have heard that from some private equity guys I deal with that some of the SPAC money's coming back. So you might see some more of those. Those were madness. Um, really crazy. Wow, this one's another one we've talked. Where is it? BSG. I'm sorry. This one's been on a tear. Look at that. Look at that. On a tear. Back above $1 with substantial volume. That's impressive. Really impressive. Nice. All right. Almost forgot we were still streaming there, guys. Jersey, my guy, he would call Lunar. That's fantastic. Um, I use, yeah, well, so my long-term money's in TD Ameritrade. It's a better platform in all honesty, but like everyone, I just feel like Webull is more like for me, it's more of like what's going to make more sense for you guys. I know it seems kind of crazy, but I just try to use it because it's something you guys are familiar with. So when we stream, when I take screenshots, it's something you guys already use and know. So I have actually been just using Webull a hell of a lot more because it's what I use to show you guys what's going on. Whereas if I showed nobody and I was just doing my own thing, I would probably just use Thinkorswim. Um, that's what I'd use. But Webull has really expanded their functionality. I think their charting software is great. Not as good as TD, but it is what it is. So, yeah, this is a good question. In some cases, yes. Mostly, I set price alerts to go look at it and see what's happening in the market before I make that decision. Unless it's something like I'm cost averaging into over long times, like if I'm buying shares of something I'm going to hold for 20 years, I just set those buys and tie that money up so that if it does hit on a really bad day, I can catch that knife and have those shares forever. But yeah. Yeah. All right. Well, I think as we discussed the law of diminishing returns, we have arrived. There's not much more I can give you. So I love y'all. Hope you stay blessed. Get on in there. Really quick question before we go. Is anybody here not actually in premium? Because I completely forgot. Duck told me to do a giveaway and I completely forgot last time. So drop a comment. Are any of you just in the free section? Never been in premium before? Hurry, hurry, hurry. Probably should have done this when there was like way more people on here. Critical error on my part. Or is this just the premium fam here? Okay, Ron XRP. I wonder if that's you, Ron. So yeah, basically, so you see my name at the bottom here. Let me get rid of this message. Big Quench. If you are on this stream right now and you are not in premium, shoot me a message. I got something for you. I got a treat for you. And for those of you that have been with us forever, I love you. And you're just so you know, I don't know if you've heard it before, but we're building out the system right now due to inflation. Unfortunately, we can no longer continue to offer the price we do. However, you're locked in. There's nothing to worry about. So if you've been here with us, you get the price that you've had, and that's it. And that's all. It does not change for you. But for people who aren't, that's unfortunate. It just is what it is. It's always been underpriced because we want it to be affordable. We need to just tick it up a little bit. It's unbelievable. Even data providers are charging exponentially more. It's just unfathomable. So yeah, make sure you hit that notification bell and follow the channel so that you guys can not miss a single stream. Amy's gonna be live trading this week. You do not want to miss that. She's the best day trader I've ever met. So make sure you follow, get that money, baby. I love y'all. Stay blessed.